Taiwanese index up on your screen. It's down around 0.3%.
Investment that they've made in pre-call is merely a financial investment.
The Power Ministry has gone ahead and invoked Section 11, which basically means that under emergency measures, power plants will be allowed to go ahead and import coal from outside of India.
First tick on the index is mildly in the green, up about 40-odd points on the Nifty.
Looking at the commentaries of the management, it's quite clear that the consumption has been a bit sluggish at the moment.
Allegations that UFlex has concealed income via issuance of bogus bills, etc.
We have 2 more hikes penciled in for the next 2 meetings. I think it's important to say that the markets were a little bit caught off guard by the strength of the data that we've seen over the last 6 weeks.
Well, ACC and Ambuja Cements, both of them are in focus because of a couple of reasons. The Himachal operations, well, they have restarted.
The Nifty is up 56 points, 17,900 exactly at 11 a.m.
The discussions right now are about extending trading hours for equity derivative contracts.
From November, December of 2019, if the cheapest entry-level plan was 35 rupees, it's now increased to 155.
G20 declaration is likely to strongly condemn the war in Ukraine.
Absolutely flat for the markets right now, while Nifty is in the green, up around 10 points.
Well, you're with us here on the last hour trade. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Rima here in the studios. And Nigel joins us from the newsroom floor as always. Guys, hi, good afternoon. I mean, this is as flat as markets have been in some time, isn't it? Just like a traffic light blinking red and green, but not really giving us any clear direction at all. Numerous times we've had 20, 30-point pullbacks, 20, 30-point sell-offs. So I think tough to now count the number of times we've had that kind of price move today. To be expected, right? I mean, from overnight, you didn't have very much by way of cues, but you do have cues right now. So if you look at the global setup, US equity futures are down a little bit, yields are up a little bit, and you've got the dollar index, which is above the 104 mark. So this is not exactly a very constructive kind of backdrop that you want to trade. The Nifty 20-day moving average is, as of yesterday's close, stands at 17,838. And as of now, that's kind of moved to about 17,826 or so. We are again basically whatever you can take either of the 2 levels, but the market's not moved very much. It's around those same levels, a little higher, sometimes a little lower, sometimes. So that kind of becomes the pivotal zone that you want to watch out for. On the Bank Nifty, we are like yesterday, exactly around that 50% retracement of the recent up move, which stands at 40,700. We're at about 40,626 again. I mean, that is a 0.25% up, 0.25% down, but around that level, really. Government companies as a pack, I looked at, CPSE companies, energy pack, that is up, and that's also, the latter is also made up of a lot of government stocks, government companies, and FMCG as a space is the only other pocket that I could see trading with about a 0.25% gain or so. This is sectorally speaking. Mid caps and small caps are down, not by much, but 0.5%, 0.75% in that zone. So pretty lackluster, pretty tepid kind of session so far. Rima, hi.
Hi, I'm watching the PSU banking space. So the Nifty PSU banking index is down more than 1%. This month, it's lost 7%. And pull up a 1-week chart and you would see the Nifty PSU banks have been selling off now for the 4th consecutive day. And that's where maximum pressure is getting exerted. 1.5% gone on the Nifty PSU banking index for the day. 7% lost this month. And so many of the PSU banks, which hit their 52-week highs in the month of December, have sold off very sharply. Take a look at Bank of India. Now, Bank of India is down 6% today, but on 15th of December, so that's exactly 2 months ago, on 15th of December, the stock had hit a 52-week high of 103. From that level, it's a 30% correction. It's pretty sharp. UCO Bank, 35% off from its 52-week high, which was hit just in the month of December. So the PSU banks ran up a lot. They got re-rated in the second half of calendar year 2022. But since then, you are seeing these stocks come off very sharply, 35% off from their high levels in just a matter of about 2 odd months. So that's clearly one pocket of pain today, Surabhi.
Oh, absolutely. And this is a very sort of decisive trend that's playing out in an otherwise absolutely indecisive market. If there's one solid trend that you can look out for, it is the one that Rima spoke about. PSU banks selling off big time. And actually, the Nifty Bank was doing much better in the first half of the session, but now even that's kind of completely fizzled out. The other space, perhaps, that one can keep in mind is the power space, because this news about the emergency measures being invoked by the central government, getting all the imported coal power plants to fire at full capacity to ensure that there's enough power for the coming summer months. That's got some of these stocks excited. Adani Power, Tata Power. They can also sell the surplus power on the exchanges, which is why a stock like IEX is up and about. So if you're looking for news-based movers and shakers, and these are some stocks, also just want to put Minda on the screen. Minda Corp is now at the lows of the day. Remember, nothing much came out of that conference call yesterday. They simply said it's a financial investment. I think market has some questions around that. So days low on Minda Corp, but that is the market. Nigel, there's nothing moving on the screen. I mean, gosh, it's like 30 points here, there. That's about it. Nothing's happening, at least at the index level.
Well, that's right. So there's plenty happening actually in terms of the broader market. So stocks are moving around. But you said it, on the index itself, it seems we're in a bit of a range. And, just there is call writing that's taking place yesterday, day before, as well as a couple of previous trading sessions. That told you that the Nifty is seeing a bit of a ceiling. But what's good, I think, is the 17,800 put, well, that continues to get written. The premium of there is around 70 odd rupees. So that's telling you that there's 17,720, 17,740. Those are the most crucial levels. The bulls will feel till that level holds out. They'll still be in the game. They'll still be hoping that in the next couple of sessions, you get some bit of a short covering bounce that plays out, given that we have expiry that plays out on Thursday itself. So limited point is there are still some signs of put writing. I wouldn't throw in the towel. And maybe, in fact, you see a bit of a bounce if those lower levels hold out, guys.
Okay, thank you very much for that. We are gravitating now towards the day's low, 17,829 on the Nifty. Let's tell our viewers what we've lined up in the last 1 hour of Tuesday's trade. We learned from sources that the National Stock Exchange is holding talks with market participants on extending market hours for derivatives.
Power stocks buzzing around in trade today after the government has directed power units importing coal to operate at full capacity in the peak summer months to avoid power shortages.
Wipro loses in trade as the company directs sharp cuts in fresher salaries.
We'll discuss market technicals with Jay Bala of Cash the Chaos, and we'll get some top stock and portfolio ideas going with our alpha manager, Amit Gupta of ICICI Securities.
Well, how should you position yourself now in the last hour of trade? That's the question, and let's put that to Mitesh, who's with us, and ask him what he would like viewers to do. Mitesh, hi, good afternoon. Good to have you back. So, I mean, not very much to go by, at least with, tailwind or headwind. So, pretty flat. What kind of positions would you want to take, and what's your view?
So, Prashant, the understanding is that, broadly, the market is not showing any kind of strong directional bias, and there is a mild, possibility of we actually sliding on the downside, because with the last yesterday and today's movement, the hourly and the 2 hourly charts have turned negative. The indicators have started looking down. So I think, then we should head towards 17,750, 700 zones. And if you break that, then we look at further declines. So we have kind of, reduced our long exposure, also, looking at some short positions in the stock side. So that's how we are approaching it. Sun Pharma is something which has come on the radar today on the selling side. That's a sell with the stop at about levels of 985 and a target of around 950, 945 on the downside can be possibly looked at. And the other one is a sell on Bandhan Bank. Keep a stop just above today's high of 236. Look for targets of around 215.
Okay, all right. Thanks a lot for that, Mitesh. A couple of stocks are moving around, actually. And Meribun joins us as well on the show. Meribun, want to talk a lot about the past stocks. Well, they are buzzing in trade today. I think we have my colleague Vivek who's standing by, and he's going to give us further. Okay, Vivek will join us in just a bit. So we want to discuss some of those past stocks with you all. But any view on these Ferris names? Just having a chat in terms of metal price movements. And China, well, the data points coming out of there are fairly okay. But irrespective of what the data points are coming out of China, they're not exporting too much. And that's what's helping, domestic Ferris players stay in the game. Because pricing is moving up, demand is strong out here. And if they don't export too much, well, that's good news. Would you buy any of these Ferris names?
Honestly, no, I think. But one thing one needs to say that everybody is talking of a global slowdown. Everybody knows it. The numbers which came, let's look at companies whose stock is quite popular in the market. Let's say Tata Steel. The point is the numbers were very disappointing. Was the market not expecting it? I don't think the market was not. It was not that they were not expecting it. Can things improve for them? I certainly believe it will. But the point is there any hurry to go and buy into them? So while there could be a trading opportunity because most of the negatives could have been discounted and the valuations right now, I don't see, honestly, Nigel, that there should be any urgency on part of investors to go and buy into them. It's nice to say that we are long-term players, we are patient, but I promise you that the last few days of the market where nothing much is happening and quite a few people are already losing their patience, the consensus is largely negative right now, and that could be the only redeeming factor for the market in the short run. Coming back to your questions, I think the two lines answer would be that the outlook for them continues to remain quite negative, I would say, for the time being. There could be positive triggers here and there, but the demand outlook is still uncertain. The valuations look attractive from a very long-term bet, and I would certainly like to bet on names which have their own mining capacity. So there are names here and there which one can buy from the longer-term angle, but not in a hurry to recommend them.
You know, the visuals, Meribun, hi, afternoon. The visuals that you're seeing is Russian President Vladimir Putin delivering the State of the Nation address. This, of course, comes after we heard from President Biden. Actually, we saw visuals of that from Ukraine. And this is, of course, coming in from Russia. Lots of focus on this because this week marks the one-year anniversary when the conflict began on the 24th of February 2022. And there are some concerns that we may actually see an intensification of what's happening with that conflict. Markets, of course, are not reacting to things with the same intensity anymore, unless and until, there is another big flare-up or something which happens, which we don't know as things stand right now. These are just concerns, worries we've heard from global commentators we've had on the program earlier today. So those are some comments coming in. We'll decide special military operations step by step, etc., etc. We'll try and get you a summary of what's being said in a bit from now and get you the visuals going. Just a quick word, Meribun, on, I'm looking at PSU bank stocks which are all selling off hard. Canara Bank, Bank of India, UCO Bank is down sharply. Actually, Bank of India is down 6%. Anything specific here in terms of worries or just a pullback? What would you do?
I think exactly a year ago I was very bullish on PSU banks, that I was negative on IT. Now I think the trade which took place, I think exceeded my own expectations, if you ask me. And I think less than a month ago when I was asked a specific question on PSU banks, I said it's still a great space to be in, but the stocks could correct 10, 15, 20% from the present levels. I think some of them are corrected a little bit more, especially the name which you mentioned. And if you ask me, is it a buying opportunity? I would say the answer is a certain yes. The point is, NIMs somewhere could peak out. Have they peaked out? Maybe one more quarter. But the point is that the books are relatively very, very clean as compared to what they were, say, 1 or 2 years ago. Will the books become dirty again? Well, let's hope not, but it will take its own time. So I think the positive story as far as PSU banks is very much there. At the stocks, the pullback which has happened, and I'm using the word pullback, which you prompted me on, Prashant, I would say that pullback is a lovely opportunity for people to go and buy into at least 2 or 3 PSU banks. I personally own 4 of them, so disclosures are very clear over here that I'm owning some of them, and I remain positive on this particular space, especially after the pullbacks with the stocks have seen.
Sharp pullback. The Nifty PSU Banking Index is now down nearly 20% from its December high. So that's on the index level, and individual names like Bank of India, UCO Bank are down 30-35% from the December highs. But the other pocket of interest today is the entire power sector. It's buzzing in trade after the government directs power units importing coal to operate at full capacity in the peak summer months to make sure we don't have any power shortages. Vivek joins in to tell us the impact and more details. Vivek.
Absolutely right. So, what the Power Ministry has done is they've gone ahead and invoked Section 11 of the Electricity Act, which basically allows, coal importing power stations to go ahead and import coal, and they would get a complete cost pass-through, and this is seen as a positive as far as the entire power utility space is concerned. So now all of the imported coal-based power plants will now operate and generate power at full capacity. Remember, a similar move was undertaken from May to December of 2022, and two companies that saw a significant positive impact was Tata Power as well as Adani Power, given the fact that their Mundra power plant operations were basically dependent on imported coal. Citi has actually gone ahead and written on this particular development. What they're saying is that this particular move will benefit the imported coal-based plants. They also believe that currently they are unable to do a complete full fuel cost pass-through, and which is why they are operating at very low capacity. Specifically, they mentioned Tata Power's Mundra UMPP, saying that this particular plant will benefit for the period where Section 11 continues to remain in force. Further, what analysts are saying is that when you're talking about the PLF of NTPC, last year, same time around, from 70%, it actually improved to 80+%. So they believe positive for the entire space, and merchant power prices will also go higher, which makes it possible even for the exchange, that is IEX.
And that explains why these stocks are excited, the few stocks that are excited in today's session. Thanks, Vivek, for explaining the details there to us. Mehrabun, good afternoon. Great to be chatting with you as always. Not sure if you look at any of these, Tata Power, Adani. It's very clear the government says run at full steam. And I think there's also in the details where if there's any differential because of higher prices of imported coal, I think there's going to be a mechanism to deal with that as well. So your thoughts?
Well, I would like to, if you allow me, Surbi, I would like to add a couple of sentences to what Rima mentioned, and even Prashant asked me about PSU banks. Just I will take less than half a minute. I think the correction which we have seen of 7 to 10% in PSU bank or PSU bank index, which Rima reiterated twice, I would like to state that we also need to look into the fact that look at the way they had gone up. I think I challenge any PMS firm or possibly any HNI to have turned out with positive returns for the entire calendar 2022 if he was not invested in PSU bank stocks or maybe the Adani stocks, which had a stellar performance in 2022. Without this too, I think your returns could have been negative. So in the light of what PSU bank stocks did to portfolios, I think a 15-20% correction from the peak levels is nothing to worry about. So that finishes my answer. Coming back to your question on the power sector, I think power, railways, capital goods are sectors which one expected them to do well. Also, one knew that the budget would come up with a lot of positives for them, and that is exactly what is happening. And this morning news which you all carried about the import of coal and other things, I think, and facility to sell the excess power on the exchange, I think is certainly very much positive. The question is, do you go and buy into the frontline power generating companies, or do you go into companies which are ancillary to the power sector? I would prefer the latter, if you ask me. So I would prefer names in the transformer sector like a CG Power, which is extremely expensive in terms of valuation, but belongs to the Borukappa group, which undoubtedly is rated as one of the best groups in the country. I would like to go with something like a Bharat Bijli over the year. I think the company in transformers with very clean balance sheet, with a substantial holding of Siemens. Then there are names like Siemens, there are names like NTPC also, which look very attractive. So this is a space which I think should remain in focus. Let's not forget we are 1 year away from the elections. The government has got a lot of things to do, and they have planned a lot of things, and I'm quite sure they will go ahead with it. And I think this is one sector we should continue to do well. So that is my comment on the entire sector as such.
Okay, all right. Some of these industrial-related stocks and PSU banks, Mehrabun likes them. Thanks for that, Mehrabun. Stay with us. For the time being, the markets actually have come off the low point of the day. So just keep that in mind. We're keeping an eye out on Putin's speech. But for the time being, in fact, from the start of the show, at least we have bounced closer around 30 points or thereabouts. Slip into a short break. On the other side, we'll discuss top stocks and portfolio bets with our alpha manager, Amit Gupta of ICICI Securities, will be joining in.
When our big boss was MD.
Welcome back. Another stock you should keep on your radar today is Wipro. It's down nearly 1%. All of you would have read in the papers today that Wipro has announced that the freshers who will be joining Wipro now are going to be given sharply lower salaries. Earlier, the freshers who had committed to joining Wipro were promised salaries per annum of 6.5 lakh. Now they're saying, join us, but you have to join us at 3.5 lakh. If you don't want to join, then don't join. So this is a sharp 50% cut, right? And everyone's wondering what exactly happened, because this is very bad, public relations, PR. Optically, it doesn't look good, because how much are you going to save by cutting down on the fresher salary? Anyway, the salaries are not very high to begin with. A bulk of the hiring perhaps has already taken place at the beginning of the year. So how much are you going to save, right? And it just goes to underscore the demand and the supply side situation that IT companies are in. Remember, IT companies make plans to hire in advance. The offer letter is given to you well in advance. At that time, you're anticipating a certain demand environment. The demand environment has changed in the last 6 months, and the supply side situation has also changed drastically. Now remember, Wipro per se, their growth is not very high. In fact, in Q4, they're guiding for the possibility of negative growth. Their guidance for Q4 is minus 0.6 to 1% growth, right? So best cases, they're going to see flat growth, right? So if you are seeing flat growth, then why even pay that balance, why even pay, an extra bit of salary to the freshers? That's what analysts are saying. Also, their margin performance has been lesser compared to peers. There you have it. Wipro's margins are lower than peers. So according to analysts, that at a time when growth is scarce, growth is moderating, the company is wanting to focus on their margins, which is why they are cutting costs wherever it is possible. On the flip side, that's on the demand side. On the flip side, attrition has been moderating for the company. Their utilization level is the lowest in the last 12 quarters. The company said we've hired a lot in the last couple of quarters. Our employee headcount has gone up by 40-45% in the last 10 quarters. We've increased in size, and now we want to utilize the existing bench because that is currently underutilized. So it's a combination of both those factors, but just purely optically, it doesn't look good when any company comes out and goes back on its promise of the salaries that they had promised to the freshers, because ultimately, how much can you save? Mehrbun, thoughts on these kind of headlines? Would you be worried that perhaps this is a sign that demand is slowing down much more than what the street was earlier anticipating?
Well, I think the clear conviction of mine last year was sell IT by PSU banks. And I think what PSU banks did, IT did this opposite. If you look at the 52-week highs of most of the frontline stocks and even the midcap IT stocks, you'll understand what I'm saying. They're sharply lower than what they are, coming to Wipro specific. I think if you look at the numbers for quarterly 3 and the management commentary, if you put them together, there is a clear-cut confession of the fact that there is a softness in demand as discretionary spends are seeing a major slowdown. The deal wins were at a record level in quarterly 3, but if you look at these deals which they had won, most of them were large deals. And those large deals, I think the ramp up which took its own time for them to come. It was expected to come maybe at least 1 or 2 quarters before that. It took its own time. The company has rationalized subcontracting of cost. That means they can hire as and when required when demand picks up. That is what indirectly they are trying to say. And this morning's incident, what has happened. So I would say that the only thing in favor, I think, of Wipro right now would be the stock price. The stock is trading near its 52-week low and much, much, much lower than its 52-week high. While the margins are lower than its peers, the point is people in defense of Wipro will say the stock is also quoting at a valuation of at least 15-20% cheaper than what its peers are being quoting at. But is that reason enough to go and buy into it? My answer would be a clear-cut no. First of all, the demand outlook is not very good. And Wipro, let's be honest, over the last 3, 4, 5, 6, 7, 8 quarters has normally reported numbers which have failed to meet muted expectations. So while the stock price could be the only thing which I would say is in defense of Wipro right now, it's going at around 16, 17 times FY24 earnings, a discount of 15 to 20% in its peers. But I would still say that there is no reason why one should be in a hurry to go and to buy into Wipro stock. People may say it's cheaper than Infosys or TCS in valuation terms, but honestly, there are not any triggers which one can see in the near future for one to be in a hurry to go and buy it of a pro. So certainly a clear ignore from my side.
Okay, everyone, it's a pleasure as always. Thank you very much for your time and good speaking with you.
Thanks,
Thanks indeed.
Thanks.
Thank you. Well, 40 points lower on the Nifty is what we have. Now we're at the low point of the day. So 17,800 is the low. We're at about 17,804. And I think you've got a similar kind of picture, not quite on the Bank Nifty. The low on the Bank Nifty is 40,508. We are at about 40,619 or so. The Nifty, yes, at the day is low. The Bank Nifty, not quite. Our alpha manager of the day is with us. Amit Gupta is Vice President and Fund Manager at ICICI Securities. Amit, it's always a pleasure having you with us. Good speaking with you. So tell us, Amit, where are markets headed? First of all, directionally, do you have a firm view that this will be a risk-off phase, perhaps some more price damage, or something else? What's your view?
So I think it's a this is how the market has been behaving for the last many months. That generally the correction of more than 1,000 points comes, market gets a little more attractive, and then you start seeing the reversal again from the range. Now, if you see from the dollar perspective, I think dollar is topping out because euro has stopped falling, dollar has stopped moving up. And on the top of it, if you look at the premium of Indian markets over the emerging markets, actually has reduced from 85 to almost 62 now, because Chinese market had moved up and they had moved up by more than 50%. So that is where our expensiveness actually has reduced over the emerging markets now. And another thing is that we are coming closer to the 5-year average price to earning, which is almost 18.5. And this is a good period, 5-year average. And I think that is where if somebody starts investing, so some more downside, some more correction or sideways movement is possible. But if you start investing here, I think the money making can be better if you are looking for beyond 1 year period or possibly 2 years period. So that is where I think the market is getting attractive. The trade deficit also has reduced from $23 billion to $17 billion. That I think can cushion some kind of rupee weakness, which has been very sticky for the last few weeks.
All right. Hi, Amit. Good afternoon. Amit, the PE, I take that point that it's at around 18 times. My only worry is on the E part of it. Maybe earnings may not live up to expectations, but time will tell on that front. From the money that y'all are managing, what are the new stocks you're buying into? Or if the markets go into that sideways, a little bit jittery kind of move, what are the key stocks you're looking to buy?
So, see, one theme is when we look at the capex story, for example. So in capex, for example, take the case of cement. Now, people were asking that when we have so much of capex by the government, why the cement stocks are not participating. So there are two ways to look into this. One is because there is very high capacity addition which was happening in the cement, and we saw that it was more than double in some cases, from 70 million ton to 140 million ton in the case of ACC Ambuja, what they are projecting for the coming 3-4 years. Ultratech Cement, which is sitting at 130 million ton, they were talking about to reach to 160 million ton. So when you have a supply so much increasing, which is almost 13-14% CAGR, and the demand, because demand is divided between infrastructure and real estate when we talk about cement. And real estate is not firing from all cylinders. It is few pockets which are definitely emerging. But yes, that is why the demand is growing by 9% or 10%. So you have some mismatch between demand and supply. And that is why cement stocks were not coming that much good. But because the petcoke prices actually we declined previously, we saw the margins were coming better, and now they were able to increase the prices. So there are two ways. One is you can look at some of those efficient companies who are possibly not going into very high huge capacity expansion like Shri Cement, but they were always at a premium valuation, which the premiums actually have shaved off. So those companies actually have come down to good levels, and from where I think we have started again averaging those positions, though Shri Cement was part of our ACE equity portfolio. Another thing is that we are looking at that the companies who are the material providers to all of these OEMs. So ultimately capacity expansion is happening across the board. So the supply is higher. So there are companies like AIA Engineering, for example, which is a 1979 Gujarat setup, very excellent track record. And this is a company which is into the grinding mills, high chrome grinding mills. They are doing much better. Their results are coming much better. And I think going ahead also, these companies are likely to give you better results and they are the direct beneficiary of this capex cycle.
Got that. Amit, good afternoon. I'm just looking at the screen right now, probably pertinent to pull up Reliance Industries. Let's get the intraday chart up. Reliance is making a little bit of a move. It's something very dramatic, but there's some sign of life on that stock. Last 2-3 sessions, it's managed to cross above 2,400 once again. And it's because of Reliance that the market isn't getting into a wider fall. In fact, we're back at the flat line. And that's largely because of the contribution that's come in from this big boy. Amit, what's the sense? There's so many triggers ahead. I mean, whether you're talking about the telecom business or, you look at what's happening with the core refining. But the stock has been so range bound. It's only now that it's looking at, climbing above 2,400. Over the next 1 year, what would you expect from Reliance, and would you be a buyer at this price?
So my sense is 2,300 around, where the stock had declined. I think there is a very limited downside from here. It is always a matter that when the growth in the price is going to come. So my sense is now 25% of Nifty is going to be occupied by Reliance and HDFC Bank after the merger of HDFC Bank with HDFC Limited. And both the candidates, they were not performing actually for the last many months. And we believe that they are coming up now. And the money flow into the emerging markets will come, because if dollar is topping out, money will start flowing into the emerging markets. It is looking for value pockets. And I think that is where those heavyweights which were not performing, HDFC Bank and Reliance both, I think they are giving some kind of value now. And that is where you will start seeing the support to the index from at least these two heavyweights. Now, coming from the fundamental perspective, you are seeing what is happening in Bharti Airtel. Their ARPUs actually have gone to 193. It's a significant jump. And another kick that we saw in the telecom space is that they are scrapping lower the order prepaid prices, prepaid cards, and they are going to higher one. So, for example, what Bharti did in Haryana and Odisha, they removed 99 rupees of prepaid and they moved to 155 rupees. So there was a fear that the subscriber base possibly will come down, though you are increasing the ARPUs, but it did not happen. The subscriber base also remained very sticky. And I think this is where both the companies, whether it is Reliance or Bharti Airtel, they are be the key beneficiary actually of this move. And we have to see the applications from 5G, which are going to be used by various industries now going forward. And that will define the further growth path. I think both of them are a good price. Telecom is looking attractive, along with both of these heavyweights, Reliance and HDFC Bank.
Amit, if you just map the way telecom companies have increased tariffs in the last 3.5 years, the entry-level tariffs 3.5 years ago began at 35 rupees. That was the minimum recharge plan. And now you can't recharge sub 155 rupees. 35 to 155 rupees. That's an increase of 340% just in the span of 3.5 years. And even higher priced plans have gone up by approximately 50% over the last 3.5-4 years. So it's a pretty decent, CAGR in terms of an increase that we've seen. But wanted to get your thoughts in on chemicals. That's a space that you like. And chemicals saw massive upgrades in 2020, 2021, and even in the beginning of 2022. But just in Q3, because of higher channel inventory, because of some moderation in exports to the European markets, Middle East, we've not seen any upgrades. In fact, according to Nuvama, the overall chemicals industry or the sector has seen downgrades to the tune of 1%. Do you get a sense that perhaps the best is over and we could see more earnings downgrade for chemicals?
See, from the price perspective, I think in 2021 second half, generally most of the chemical companies, they had made the top. And then we saw almost 1 year of languish movement actually by all of these companies. And from the export perspective, as you mentioned, if you look at electronics export are picking up in India, and the other two are now going to be engineering goods and chemicals. And I think chemical space, what we like here, so we need to be a little choosy because there are many stocks. I think two segments are looking better. One is the hydrofluorocarbons, HFCs providers, for example, SRF. So they are the material provider to the OEMs in air conditioners. And you are seeing that the OEMs again in air conditioners are facing the pressure of Japanese competition. So you have seen what has happened to Voltas. So Voltas declined from 1300 to 800 because the market share declined from 25% to near 23%. But it did not, impacted negatively to the material providers like SRF, which provide refrigerant gases, because ultimately they are the providers to everyone, whether it is Japanese or whether it is Indian OEM manufacturer. So that is where these B2B companies are doing much better right now. And AC has a penetration.
Okay, I think we lost the line. Amit, we'll try and go back to him. If we do reconnect, I'll wait to be told to do so. Okay, I don't think we'll have him back. By the way, guys, Rima and Surabhi, I was thinking, how about 4-5 hours more of this kind of market?
No, Prashant, you can't say this.
You guys like?
and they're thinking of extending trading hours.
No, that's what I'm talking about. So, 20 points up, 20 points down. What I'm referring to, actually, I just want to quickly make a mention, is that, and we reported this earlier, that the exchanges and led by the NSE are actually in discussion, preliminary, very early discussions to extend trading hours, and largely in the equity derivative segment. That's basically what we are picking up. As I said, very preliminary, no deadline by when to do this or even to arrive at a decision. And there is a general sense of agreement that, this will require a fair bit of back-end work. I mean, tech needs to be sorted out, settlement, how will settlement happen, et cetera, et cetera, et cetera. All of those things have to be tied up before a decision is reached one way or the other. Remember, SEBI did pass an enabling resolution in 2018, which actually sort of allows exchanges to extend trading hours, both in F&O and in cash segment to varying degrees. So exchanges, if they so choose, can do it. But of course, the question is, like what we've seen in the last so many times that this issue has come up, will this go anywhere or not is something which has to be seen. For now, what we're picking up is that this is the conversation again, which exchanges are having indeed with brokers, both large brokers and of course some of the smaller ones as well. We'll take a quick break here. We'll come back. As always, we'll get you a quick check on what dealing rooms are talking about in our segment, D-Street Chatter. We'll also give you, tell you what the buy today, sell tomorrow calls are with our technical experts. Stay with us.
Welcome back. You're tuned into Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the markets have been more or less sideways. Ramesh, at least we're holding on to that 17,800 odd mark. But what are you picking up in terms of D-Street Chatter?
Hi, Nigel. It's been quite volatile in today's trade, sharply off highs. But the overall sense is that there is buying interest in the FI today. In fact, I understand there is a Nifty 50 basket buying at leading FI. So it looks like the FI flows could be slightly on the positive side. That's the overall feedback. As you rightly pointed out, 17,800 is acting as a very strong support, so that's something to watch very closely. If that's taken out, we'll see probably a sharp sell-off. So that's a bit of a worry as well. The other worry for the market is the fact that the Bank Nifty is not performing. Every day, you're seeing other stocks doing good, but the Bank Nifty is under pressure. Someday it's a private bank. So today it's a case of PSU banks under pressure in trade today. So that's something which is a bit of a worry sign. The other thing, the feedback is that the cash volumes have dipped very sharply, and that's because of the new margin norm. So looks like the market will take its own sweet time to settle down with the new margins. Till then, probably you will not see large cash volumes. So that's a bit of a worry. But today, though it's volatile, my sense is there is positive bias from the larger FIs.
Because of these new norms, fairly large trader said this tongue-in-cheek. He said it appears that the full market has gone in ESM, with the kind of tepid volumes that we have seen. Yeah. But plenty of stocks, Nimesh, are moving around. So tell us, what's the buzz out there?
So in terms of individual names, the first stock on my list today is Interglobe Aviation. Again, the stock is under pressure today. Remember, last week there was a large block when the promoters sold. Now I believe there's going to be an increase of weight in FTSE. And that is likely to be announced very soon. In fact, the expectation is that could lead to a buying of between $13 to $15 million as and when the changes happen. So that's something to try going forward. That is Interglobe. The second stock is Dishman Pharma. A big move in that stock. Even today, the stock is up 39%. This month, the stock is up 45%. That's the kind of move you've seen in the stock. And overall chatter and the feedback was that one of the leading mutual fund, domestic mutual fund, was an active buyer in this stock of late. And hence you're seeing a big move in that stock. The third stock is Syngene. Again, on a weekday, that stock is buzzing in trade up to 1%, largely on back of strong buy flows at an FIS. So first signs of some bit of buying back after the large block where the promoter sold a large chunk to larger institutions. So opposed that, today is the first day when there is some bit of buying interest back. And the last stock is HCL Tech. Not everything in IT is moving up. This stock has been pretty much flat for the last many days now. Even in today's trade, a long bit of consolidation in that stock. But the feedback is there is supply in this particular stock from larger FIs. So it looks like some larger FIs are looking to sell out of HCL Tech and moving to other names. So that stock is under pressure on sell flows.
Nimesh, just one follow-up question on Interglobe Aviation and the possibility of a FTSE weightage increase. What could be the extent of it? Because the block deal which took place last week was just to the tune of about 4%. Does that change the free float to a great extent, which can result in a lot of buying? And secondly, when can we expect this announcement? Does the FTSE rebalancing happen quarterly, fortnightly? Go ahead.
So, Rima, in terms of how much weight it will increase, the overall feedback is this will lead to a buying between $13 to $15 million. In terms of number of shares, close to 5 lakh shares, which would mean on an average, 3x of the daily average. That's the number which the street is talking about. Now, when it comes to change in the FTSE, I guess for this particular kind of deals where the promoter sells stake and the free float goes up, there is no specific deadline. Just look at what happened to Coforge, a couple of weeks back. I guess the Coforge block happened on the 13th of February, and on 16th of February there was an announcement that they're increasing the weight effective from 18. So typically in 4 to 5 working days, you probably see the FTSE announcement coming soon. So even in case of Interglobe Aviation, the feedback is maybe tonight or early tomorrow, you will see some bit of announcement from FTSE, and in the next couple of days, the effective changes will happen. As I said, in terms of inflows, this could mean between $13 to $15 million. So 100 crores of buying in Interglobe since the fact that the promoter holding has come down by 4% after that block which happened last week.
Rima, just to add onto that point, the current market capitalization of Interglobe Aviation is roughly around 70,000 crores odd. The free float is only around 20,000 crores. 4% was around 2,500 crores. So effectively, the free float will go up by close to 10%.
Correct.
From around 20,000 crores, it will go to around 22,000 crores. From 18,000, it went to around 20,000. So on a base of the free float, it's rather large. So as a percentage of the total market capitalization, it doesn't look
of course, so
that
because
large.
It's 4%, so it's not going to have much of an impact. But the fact is, do remember that there is a lot of short positions as well.
Yes.
A lot of people had shorted the stock in anticipation of the block deal at a discount and all. So that's going to play out. But clearly, from a feedback, the overall feedback is that close to 5 lakh shares or $13 to $15 million is expected in terms of fresh inflows in Interglobe very soon.
Thank you very much for that, Nimesh. Interesting list as always. By the way, IT is selling off now. Names like TCS, Infosys, Wipro are all down more than 1%. And the Nifty itself is now getting back to the day's low. The Nifty is now at 17,819. Mitesh Thakkar is back with us for a few BTST calls. Mitesh, what would your recommendations be?
I have a STVT on Canara Bank actually. That's a stock which is trading towards the low of the day. Keep a stop at 281 and look for targets of around 272 here. And DLF has also negated the breakout, so that's a STVT as well with a stop at 359.5 for targets of 350.
Mitesh, thank you very much for the calls. Let's take the conversation forward. Jay Bala of Cash the Chaos is joining us on this leg of the show. Jay, great to have you on the show as always. We know you've been sounding out that cautious note for a while. I mean, maybe the slide hasn't really started, but yes, the market isn't going up in a hurry either. Tell us, what do you make of this extreme tight range on the Nifty last few sessions?
Yeah, good to be here, Surbhi. I warned on the 10th of January that not to be without a put protection for the portfolio between January and the middle of February. And we had the Adani imbroglio play out in late January, and I had very carefully used my words saying that this will be the starting point of shock and awe. And so we had seen the start, and we are probably moving to the next stage of that. The 18,135 high we saw a couple of sessions ago, I think that is putting a ceiling for the market's up move. And we are most likely to see an accelerated decline pickup for the market. And 17,720 would be the confirmation point. But already the market form on intraday basis is saying that that the next leg of the decline has already begun. And I won't be surprised the market takes out the budget day low the next 3 sessions.
Okay. And you're expecting this to happen, this accelerated decline? I mean, timelines matter, right? You're expecting this to play out in near term, Jay?
Yeah. See, time is always approximate, and it's the most difficult component to understand and predict. But as long as price behaves in an expected fashion, whatever our thesis is, that still continues. So from a medium-term perspective, I've said this market has to go below the June 2022 low. And from a short-term perspective, the supports are about 17,720. After that, it's about 17,353, the budget day low, and then it's about 16,750.
All right, Jay, you're sounding very, very cautious. Let's get a couple of bullish aspects on the screen then. I believe a couple of stocks you believe will look up. One is IEX. That's been a big underperformer, but it's showing some traction, outperforming in an otherwise wobbly market. And the other one is JK Cement. Well, fundamentally, things could look up. We had the management earlier today, and they were sounding very, very optimistic on volumes as well as on EBITDA per ton. Give us your call on both these two stocks.
Yeah, these two stocks seems to be moving upstream, and IEX, I think it will protect 132, and it's set to rise to somewhere close to say 180 or thereabouts. But don't be too optimistic on achieving the targets. But as long as you're seeing some profits, book along the way. And JK Cement is also looking quite attractive from a very short-term perspective. Possible potential to rise to somewhere close to 3,400, I would believe. But it has to protect 2,500 from a short-term basis. So both are looking positive from a trading basis.
Jay, which are the weakest looking charts according to you?
Yeah, I would say, I've been saying the banking index was going to be the contributor for the next leg of the move, but the pressure is building in the private sector banks. Some, medium-term big patterns are forming in Nifty private banks. But, surprisingly, Nifty Pharma, I expected it to hold above 12,000, but, surprise weakness building up in Nifty Pharma. And, if it were to close below 12,000 on a weekly basis, I think there is a further 20% drop potential for the Nifty Pharma index. And, a stock like Sun Pharma is registering a double top. So caution there. But as a sector, as of now, IT is still bullish. But if it must hold 29,500, if it does hold about 29,500, there is a possibility for the Nifty IT index to rally to 34,000. This could be in sync with the NASDAQ, which I think is having potential to rally up to 13,000. So, but 29,500 is critical. If Nifty IT goes below 29,500, there is a possibility that, this rally has petered out.
Prashant, just hearing Jay, I went back to once again read the details on Putin's speech and the big headlines coming out of it. So basically, the title of the piece on CNBC.com is "They Started the War." That's the kind of rhetoric we've been getting over the last 24 hours. It is the one-year anniversary, and maybe hopefully it just sort of boils back down once this anniversary is over. But you never know where the next flashpoint is really coming in from, right? I was looking at the dollar as well. Spiked above 104, and then today U.S. market resumed. So we go back to looking at the 10-year yield, the dollar, and just see what risk sentiment is like. Jay, since you've been cautioning us for a while, in case your base case comes through, then where's the hiding space in the market? Health stocks, healthcare stocks, anything in pharma, anything where you can kind of pull most of the money out and then put it over there?
Yeah, at the moment, other than IT, nothing else is offering a hiding space, Surabhi. I was expecting pharma to perk up, but in fact, that is looking like that might even break down. Even the outperforming stocks like Zydus, they might also start to cave in if Nifty Pharma were to close below 12,000. Cash and dollar, that's the hiding place.
Would you recommend increasing the cash component of your portfolio?
Oh, definitely. I would say, you must be in cash somewhere close to 75 to 100%. And, unless you have you have the ability to pick up, stocks that can swim against the stream, you're better off going to 100% cash.
Okay, thank you very much for that, Jay. Thank you very much for joining in. Get into a break. We'll come back. 5 minutes left for markets to close. We'll get you the closing rates.
Welcome back. Look at this market, 4 points down. That's what you're getting on the Nifty. It's as close to the flat line as can perhaps be. The Nifty is not even up or down 0.1%. It's just 27 points. That's 0.05%. The Bank Nifty is also as flat as the other indices. The midcap index is going home with a slightly deeper cut. So again, midcaps are not, portraying any defining trend. They're up one day, they're down the next day. Absolutely no trend or direction in this market. Anyway, let's tell you the movers and shakers of the day. On the gaining side, it was really all about a lot of these power stocks because of the news that came in on imported coal-based power plants. That caused a bit of a flutter. Even NTPC is up about 3.5%. Tata Power, Adani Power, a lot of the power stocks are up. And the exchange, IEX, on which they can sell their surplus power, that stock was also up and about. So power was definitely a lit-up space. Then you move on to some other movers. Britannia put on about 1.5%. Tata Consumer had a little bit of buying. Lever had a very microscopic kind of a 4-5 rupee up move if you're trying to pick trends. There was a little bit of a move on steel stocks. On Tata Steel, it still culminated in a 1% rise. JSW fizzled out. JSW is ending slightly negative. Same for SAIL. No very clear decisive trends really on steel. A lot of talk is obviously on international prices moving higher. What else? Divi's, Adani Ports, these were some of the stocks that were up. Cipla, some respite after a big drubbing just yesterday in trade. And then it just peters off over there. Banks have not given a decisive trend. PSU banks have been, of course, weak, but the others, if you're looking at the frontline ones, ICICI Bank, very mild positive. HDFC Bank, again, 0.5% up. Hardly any defining trend. The one stock that stands out is probably Reliance. That helped the market at least close at the flat line. But Reema, I mean, otherwise, it's just impossible to pick a trend in this market.
Well, weakness in PSU banks, I think we could, agree on that. The Nifty PSU banking index is down more than 1%, with names like Bank of India down 6.5%, UCO Bank down more than 5%. But even the other financial names like Canara, Bandhan Bank all came in for big selling pressure. Minda Corp, after the company reiterated that their investment in Precall is a pure financial investment, the stock ends lower, sees profit booking. That stock was down close to about 3.5–4%. On the gaining side, Lumax Autotech sees buying for the second day in a row. If you take into account yesterday's move and today's up move, we are looking at a 10% gain. Delivery is another space that saw some buying interest. But all in all, 18,842 on the Nifty, just down 1%. So this has turned out to be a very quiet session, but global cues are a bit subdued. The Dow, the US markets, which open up after a day's break, is currently suggesting a weak start. The Dow futures is down more than 150 points. Out of time on closing well, but don't go anywhere. We've got a lot lined up for you on the other side.